Alrighty, good morning, everyone. Thank you all for attending this webinar about UK CBAM and the world of customs compliance. Today with me is the lovely Holly Piggott. I think we met each other for the first time last year. And if memory serves, I think the next time we will see each other in person will just be in a couple of weeks already for the summit.
Yeah.
Perhaps what would be very interesting, just to briefly set the stage, I'll tell you a little bit about IACBAM before we actually go into the content of today's webinar. So IACBAM is a CBAM neutral organization. We are not necessarily pro CBAM nor against CBAM. And we really try to keep the balance between various parties. We have a various number of members that are both CBAM or against CBAM because it severely hits them, of course. And what we really try to do is just standardize and promote best practices within the industry. Anyone affected by it benefits from a good working CBAM. We do that through our certifications. They're voluntary certifications that you can take up as a company to essentially make sure you don't make obvious mistakes, but perhaps also slightly less obvious mistakes. We have them for people, we have them for companies. Soon we will have the 3006 standard, which is a new standard we're rolling out for consultants, MRV consultants, people that want to do advisory in third countries. Because as you know, CBAM requires also a strong verification component, and there's not enough people guiding the companies getting ready for verification. So this is also something that we are working on quite actively. Knowledge sharing is, of course, a big part as well. And that kind of brings us to the topic of today's session, which is our webinar series. And today's topic is UK CBAM. And particularly, we will be discussing customs and cross-border readiness. And the guest of today's webinar, or the host of today's webinar, I guess, is none other than Holly Piggott. I think, Holly, it's much better if you would introduce yourself. And I think you will do that maybe in the slides as well, right?
Sure, yeah.
Okay, so I'll skip the introductions and you can do your own introduction. I think that's always much more natural. I think you are very skilled. So CBAM, so I'm very excited to hear you, especially on UK CBAM, because I think you're one of the most equipped people that can actually draw the bridge between the different mechanisms and do a little bit of compare and contrast. So I hope we will be able to see some of that today. Maybe just as a small recap on what I told you everyone earlier, the 3001 to 3006 certifications, it really starts to pick up speed. We see that there is just a huge demand in the market right now just for some sort of best practices, some sort of light at the end of the tunnel, because CBAM is a very complex, evolving field with a lot of uncertainty. And for this reason, if you are interested in learning more about how you can actually manage CBAM well in your company, whether that's through training or best practices or things that you can adopt, I invite you all to visit our website, IACBAM.org, and please check out our certifications page. You will see there's various different types of certifications that you could adopt, whether it's for your own knowledge or for your organization's processes. And with these standards, of course, we try to build also a trainer network around these standards that can, in your jurisdictions, I think most of the visitors today will be from the UK. We have quite a few trainers in the UK market as well that would be able to explain these things to you. But yeah, it's a relatively rapidly developed around Europe, varied interest of people trying to adopt these standards. And then lastly, of course, everyone that gets certified becomes a member of the association. You get updates to basically everything there is to know about CBAM. We recently rolled out an update section on our website. If you're interested in following the developments of the mechanisms around the globe, please also have a quick look at our website, IACBAM.org. And in the updates section, you can actually see CBAM across jurisdictions, whether that's EU CBAM, UK CBAM, or even the upcoming Norwegian and UK CBAMs are tracked there. which could be quite interesting if you're into the mechanism, but also if you're actually impacted by it. And then last but not least, I just want to quickly touch upon our summit, which is taking place a little bit later this year. If you're interested in the summit, we have quite a few interesting speakers and perspectives. I believe, Holly, you will also be attending, so people can actually meet you physically and on site and just meet you and have conversations. That's kind of the idea, knowledge sharing, but taking that to the personal arena where we can actually have nice interactions. We have verification bodies, we have software providers, we have importers, exporters, financial experts, all attending, and it's moderated by none other than Benjamin Stephen, moderator and journalist for the Dow Jones. So that's quite an interesting perspective. If you're interested in that, again, you can find the information directly on our website. That being said, I would very much like to hand over the microphone to Holly. And if you would be able to share your screen, that would be amazing.
Of course.
And then the stage is yours.
Can you see my screen? Hopefully it's up now.
For me, it's still loading. Yep, perfect. We can see the screen as well. Yes.
So firstly, thank you so much for inviting me here today. It's a pleasure to speak.
Just FYI, I see PowerPoint itself, not the full screen yet. So perhaps.
Okay.
Just
see what can I do to address this.
I think if you hit the bottom right corner, there's the little slideshow icon. A little bit to the left. There, you're almost there. There's the looks like a projector screen.
Is that the one?
Nope, not yet. All the way at the bottom. Yes, that one.
Okay, perfect. Thank you.
Yeah, wonderful. Good luck.
Got there. Thank you. So, Betty, thank you so much for inviting me to participate today. UK CBAM is a really important topic affecting UK businesses in the scope of CBAM, and I think it's important to open conversation about it and share as much insight as possible. I attended the IACBAM training in Prague last October, and I learned a lot, particularly with regards to establishing frameworks within organisations to manage CBAM responsibilities and understand how to monitor and report on CBAM updates and implement comprehensive CBAM training within an organisation, which is something which Alinea Customs offers. So as a brief introduction, my name is Holly Piggott. I'm Director of Alinea Customs. We are an independent UK customs brokerage. I joined the company in 2019, initially to support companies manage the transition after Brexit. And we've expanded in scope to also become a regulated UK tax agent, which means we will also be supporting organisations with CBAM tax returns from 2027. The company's name, Alinea, is derived from Latin, and it means a new train of thought. And it reflects our approach to delivery of strategic, forward-thinking solutions in an increasingly complex trade environment. I have a master's in international corporate law and commercial law from the Dixon Poon School of Law at King's College. So I'll go into the presentation. So I'll begin with perhaps a high-level overview of the UK carbon border adjustment mechanism. I appreciate that probably a lot of the people that are attending the call today, some might have a lot of knowledge already or be particularly familiar with EU CBAM, and some might be completely new and joining the call to really try to understand how their organisation should take steps to prepare for this dramatic new policy shift. So from the 1st of January 2027, the UK Carbon Border Adjustment Mechanism will place a carbon price on some of the most emissions-intensive industrial goods imported to the UK from the aluminium, cement, fertiliser, hydrogen and iron and steel sectors, which are at risk of carbon leakage. The UK government has published draft carbon border adjustment mechanism legislation in April 2025, and this has been subject to a review by relevant stakeholders. And in 2027, the Finance Bill 2025 to 2026 will be updated to introduce the final carbon border adjustment mechanism legislation. Prior to this, the default emissions values and the CBAM rates will be published in Q4 2026 to help businesses prepare. Just to be aware, at this stage, because the UK hasn't published a lot of important information, particularly the default emissions values, details on how to calculate emissions from installations, the direct methodology, and also the CBAM rates. At the moment, a lot of any guidance in terms to pricing and costing for CBAM can really only be estimated, when nothing can be really provided for definite until the actual values are published in Q4 2026. So at this stage, I think the key aspects which businesses should consider is how to prepare and how to establish frameworks in the organisations with such as standards established by IACBAM, the 3004 and 3002 standards, to help them manage the implications of CBAM, because it's a completely new policy and a completely new tax. And so, firstly, I would suggest you just understand whether your goods that you import are in the scope of UK CBAM. Because already we've had at Linear Customs have machinery firms approach us asking if they're expressing a concern about UK CBAM because they have machinery products which are made out of steel. And at the moment, those type of products wouldn't be in the scope of CBAM. So it's the first place to start is, are your goods in the scope of CBAM? So we'll start by looking at the structure of a commodity code. So we'll have heard a lot about tariffs and US policy during the past year. Tariffs are based on a commodity code, and so are prohibitions and restrictions and other types of indirect tax, such as CBAM. So the World Customs Organization publishes the harmonized schedule, which is used by all members of the World Customs Organization. And at the moment, I believe that's around 164 nations. So the HS code is globally recognized. However, it only applies to the first 6 digits of a commodity code. And CBAM is established at between 4-digit to 8-digit level. So the first two numbers of an HS code or commodity code are the chapter, and the chapter determines the type of product in the sector. So for example, for steel, that would be chapter 72. And the heading is a 4-digit code. And this determines, it's generally based on a level of processing. It's a further layer of identifying the product. And then that extends further to the subheading. And the subheading is used to determine product-specific rules of origin, which isn't necessarily appropriate for CBAM, but it's important to know. And then at the regional level, and these are the HS codes are usually between regions. Your supplier will usually provide a minimum of an HS code, 6 digits. But it's also important not to rely on the code provided by your supplier, and always check it using the UK Trade Tariff for UK imports. And their local classification numbers. So in the EU and the UK, these are largely harmonised. And you'll see, so for imports, a 10-digit commodity code, which in the EU would be known as a tariff, would be required for imports. And then there's some regional extensions which apply to 99 literally less than 1%, and they may apply to whether the goods contain refrigerants or nursing codes for agricultural products. So it's important to address the scope of the goods which your company trades in, and consider the use of external tariff consultants such as Linear where appropriate. So I'm going to take a slightly more granular look at the list of UK CBAM goods and associated codes, which are in the scope of UK CBAM. We'll also here look at its relevance to the free allocations. So during the first year of UK CBAM, free allowances will be applied, and they will be considered within the CBAM rate, which is going to be published by the UK government on a quarterly basis. The UK government hasn't yet published the CBAM rate. So at the moment, those type of organisations which think that they might be very heavily exposed to UK CBAM are taking steps to estimate their potential exposure, and probably starting with this document, which is it was published in December 2025, and it's ETR 11, and it refers to the UK's relation to the CBAM's relation to the UK ETS system, provides some guidance on how the free allocations will be allocated, and there's two multiples which I'll discuss later in the presentation. But for now, for industrial companies, I would suggest to look at this document. So you can see the UK CBAM in column A, the ProdCom code in column B, the product benchmark, and this is a very important factor for the calculation of free allocations, and the free allocations are related to the CBAM rate and the CN code. And so here is where I would suggest to look to see whether your products are covered by the scope of CBAM. So this is cement, nitric acid, ammonia, potassium nitrate. We also know that potassium nitrate is also used within the scope of large-scale renewable energy production, not just agricultural fertilizers, mineral and chemical fertilizers, Cintador, and here the product benchmarks, which these are interestingly related to Article 15 of the Greenhouse Gas Emissions Regulations, which is also the Annex 8 to the free allocation regulations. And I'll mention this a bit later. So the product benchmarks here, we see unwrought aluminium. To calculate the free allocation, the product benchmark would be in the aluminium category, and then to find the exact amount of the free allocation for that sector, you would visit Article 15 of the Greenhouse Gas Emissions Regulations. And here's the codes for the aluminium sector. So these are all headings. They're 4 digits, so we know they're a heading. Apart from this one here, which just goes to CN level, and we presume perhaps there's some adjustments at the tariff level. Aluminium cask, aluminium containers, stranded wire, other articles, and hydrogen. So that has been quite a granular look at the scope of tariff classification. Going back to frameworks and how organisations implement a comprehensive structure for understanding how they address CBAM, for organisations which have a significant amount of inventory, which they're importing, we would advise to implement a CBAM classification roadmap. So whilst the World Customs Organization has established the HS Convention, this only applies to the first 6 digits. And so regional classification may be required. And it's also important to verify the codes provided by your suppliers using the UK Trade Tariff. And the scope of CBAM will not necessarily cover all goods in a particular harmonised scheduled chapter. So we would advise to set up a centralised tariff classification inventory for all goods purchased, sold, transferred or moved internationally. Map supply chains and shipment flows, for example, intra-company, intra-branch and third party, to identify where CBAM obligations arise, and review HS codes for export and import, including national subdivisions, CN, UK Global Tariff, US HTS, and EU tariff, assess CBAM controls across relevant jurisdictions, because the EU also has CBAM controls as well as UK, and we both know both economies are hugely interconnected, particularly with large-scale infrastructure products. There will be a significant amount of companies using factories in the EU to manufacture their products and then re-importing them into the UK. And there's also an interesting intersect between, in that type of processing context, for the intersect of cross-border movements of VAT within the EU that we've had to address recently. So there's also review exposure to CBAM, including the tariff classification, the country of origin. The country of origin will have a completely different context in relation to CBAM than it does to the product-specific rules of origin in a trade agreement. But nevertheless, it's very important. So the UK applies non-preferential rules of origin, and UK origin goods won't have CBAM applied to them. And supplier readiness. Assign internal ownership and escalation routes, including where external CBAM specialists should be consulted, and apply document classification methodology. And this can include the general interpretative rules analysis, notes, rulings, and precedents, and establish version control and change management procedures for CBAM updates. We'll often see companies that maybe are using a multiple commodity codes. Perhaps they've purchased steel pipes, flanges, and they're creating a steel frame for a LNG gas center or for a data center, and they're creating, there's been a change of tariff heading, and so then they have to address their exposure to CBAM because of the outward processing which has occurred to their content, and perhaps some new content has been incorporated in the UK origin content. And again, another address, the address of what content is exposed to UK CBAM and what isn't is important. And I can't underemphasize how important it is to keep all supplier documentation, particularly commercial invoices, bills of lading, packing lists, and details of any duty that's already been paid to HMRC or paid or arranged through the UK ETS. And phase 2, here we will come to the application of the general interpretative rules, if there's any questions regarding the commodity code in question. The creation and maintaining commodity files containing GEA reasoning, product specifications, technical sheets and drawings, binding tariff information rulings where relevant, and duty, VAT, excise, anti-dumping, countervailing quota measures, and ensure linkage between tariff codes and taxation, including exposure to CBAM per jurisdiction and the implications for transfer pricing or product costing. Because again, we might see organisations move goods between their various international plants. Also maintain document tracing, identifying how each classification was determined, and build a data repository to support claims under carbon pricing, independently verified emissions, origin certifications and supplier declarations, and always validate supplier provided codes, confirming exposure to UK CBAM where relevant. After the first 6 digits, there are significant variations in regional tariff classification. And then finally, phase 3, which we would propose to implement in 2027, would be defining and implementation of the CBAM classification plan. And I would suggest you deploy classification guidance and training across procurement, logistics, engineering and finance teams. Embed tariff codes into enterprise resource systems, custom software and product master data, ensuring alignment across all systems. And monitor regulatory updates, including quarterly government CBAM rates, default values, recognise carbon pricing regimes, actual emissions data verification methodology, national classification notes and explanatory notes, and reporting and payment submission deadlines, and maintain an audit trail demonstrating classification logic, and then also set up a correction and disclosure process for CBAM reporting. And that's as with VAT returns, no doubt that particularly in the first phase, there may be certain errors that would occur on CBAM returns, and it's important to also maintain visibility of how to correct those errors. And we would suggest to integrate CBAM reporting and an appointed CBAM officer within the organisation, ensuring a robust end-to-end CBAM classification and compliance programme. So after the CBAM classification advisory, and now perhaps let's take a look at how is the UK CBAM tax going to be calculated. So I've taken this from the government's latest publication. So the figure 1 addresses how to calculate CBAM liability. And we'll see here the UK CBAM liability is the imported embodied emissions multiplied by the CBAM rate. And we'll come back to the CBAM rate because that isn't published yet. And then if there's a carbon price relief available, that can be deducted. And the carbon price relief will be the deductible carbon price and multiplied by the relevant imported embodied emissions. And that will be the total CBAM liability. Here, the liable party may calculate embodied emissions using either independently verified actual emissions data, and that would have to be provided by the producer or the installation that the goods are purchased from or supplied by, or the prescribed default emissions values. And from 2027, the government intends to adopt a single default emissions value per product, and the methodology underpinning these calculations will be confirmed and the default values published ahead of the introduction of CBAM. So we'll have a slightly closer look at how is the UK CBAM rate tax calculated. So the CBAM rates will be published by the government, so businesses won't have to calculate this. But obviously, analysts are really looking at this at this stage and seeking to estimate or approximate what will the CBAM rate be for a particular sector or a particularly given good. So the CBAM will be the average UK ETS price multiplied by the free allocation adjustment. So the CBAM is going to be introduced gradually, and from 2027, there will be a 97.5% free allocation given to the sectors, and that 97.5% free allocation will reduce to zero by 2025. And at this stage, the UK government has published an intention to align with the EU from 2028. And that's a concept of dynamic alignment. And hopefully there'll be some discussion of that at the conference in Prague. So looking at this, the CBAM rate will apply on a per tonne basis to the embodied emissions associated with CBAM covered goods, and will be aligned with the carbon price faced by UK domestic producers after accounting for any reductions. And this will reflect the UK Emissions Trading Scheme carbon price and the impact of free allowances. And this goes back to the product benchmarks, which I discussed when we looked at the tariff classification for the products. So the UK free allowances are determined by two factors. These are the proportion of the sectoral direct emissions covered by free allowances, and sectors that previously benefited from 100% free allowances will receive a gradual reduction in this rate from 2027. And these are related to the benchmarks established in Annex 8 to the free allocation regulation within the UK ETS. And that can be located in Article 15 of the Greenhouse Gas Emissions Regulations. And the proportion of sectoral direct emissions, so that's related to the product benchmark, will be multiplied by the reduction factor, and this will be 97.5 in 2027 for sectors at risk of carbon leakage. And so here we can see that this, and the UK government will publish the CBAM rate, and it will be published on a quarterly basis, with the first rate published as a trial in Q4 2026. So I'm just provided a brief glossary of terms here. So let's look at some of the the words that have arisen within this presentation. So we have the carbon price paid, and the carbon price paid is the goods which are imported, but if they're subject to an explicit carbon pricing scheme in the country of origin, such as the EU's ETS or in Switzerland, and independently verified, then the deduction can be made for the carbon price paid. And the supporting document for the relevant carbon price relief would be provided by it would have to be provided by the installation that manufactured or processed the CBAM good and independently verified by a member of the Global Accreditation Cooperation Incorporated. And the acronym for that is GACI. And the HMRC are going to publish a template for these installations to complete to confirm the amount of carbon price relief which can be applied. And then we also have the verified emissions data. So this is the information on the verified emissions intensity for each individual CBAM good imported, broken down by the relevant commodity code. And the supporting documents will be the record keeping evidence, and specific details of what records are going to be required are due to be published by the UK government in spring 2026. And the liable person for providing that data is the importer, supported by data and verification reports provided by the manufacturer and installation producer. And the default values. So the standard emissions intensities will these will be the default values published by the UK government, which should be used when the installation is unable to provide independently audited verified emissions data. And HMRC and Treasury will publish the default value tables, and the importer is a responsible party for applying them to their CBAM return. And then let's look at responsible parties. So the person who is liable for UK CBAM is the importer, and the importer is legally responsible for submitting the CBAM return. Although they can appoint a tax agent, the tax agent will not share fiscal responsibility for the accuracy of the data. They will only act as the intermediary. It's the liable person is the importer, and they can choose between using default emissions values or actual emissions data. And if they use actual data, they should ensure it's verified. The overseas producer, the installation operator, must monitor and record the embodied emissions of their goods and provide this data to the importer if they agree to. To be accepted as actual data, the producer must allow an independent verifier who's a member of GACI to audit the facility. And the independent verifier is the third-party body that audits the producer's data. And for UK CBAM, this verifier must be accredited by a body which is a full member of GACI or equivalent standards specified by HMRC. But at the moment, it's a member of GACI, which is the important organisation to remember. So what steps should my company take to address CBAM in procurement? So companies are encouraged to identify and manage any exposure within their supply chains, and procurement teams should adopt a structured approach to assessing risk, evidencing compliance, and obtaining legally reliable information from their suppliers. At this stage, of course, it's quite hard to provide details of the relevant legislation to direct organisations too, but we can provide as much information as we have as possible and encourage levels of cooperation between cross-border contracts and cross-border movements. And I would suggest also we've looked at the responsible parties, and there's also that we have to consider the role of traders and intermediaries and distributors who might not have direct access to their production or the installations emissions data or they may be using multiple suppliers, and they may have some, will be able to access some from one supplier, but not from the other. So it's important to consider all parties within the supply chain. So we'll look at the suppliers and distributors of CBAM exposed goods, the countries of origin. Due to global supply chains, the country of origin will not necessarily be the country of export. And production processes, including any known use of low carbon or high emission technologies. The carbon price relief, including payments made to government authorities due to an existing ETS or carbon price mechanism in a qualifying region. And the levels of cooperation, addressing the supplier's ability to be able to access verified emissions data and evidence of carbon price relief in the required format. And so here we could conduct a mapping exercise. I put together here a UK CBAM risk matrix. So we can consider the commodity risk, the country of origin, the supplier emissions data quality, the production process transparency, use of low carbon technology, third-party verification, supplier engagement willingness, and contractual controls in place. We work quite significantly in the energy sector, and we've noticed that procurement contracts often take place several years in advance of import, and it's important to address change management at this stage, because often if any changes are required to an existing contract, the supply chain agreement, then there will be some, it's generally termed as a change order required to the contract if some amendments are required, and this could be a request to provide verified emissions data or evidence of carbon price relief. It's really important in high value contracts if it's possible. And then we'll look at the risk factor, low, medium, high or critical, and we can look at the low, no CBAM scope goods, medium, occasionally importing CBAM scope goods, but less than 50 tonnes per annum. Actually, at the moment, sorry, this is EU focused. So the UK and EU differ. So the EU has a minimum registration threshold of 50 tonnes per annum, whereas the UK has a value base of £50,000 per annum or per 12 months. And high would be regular imports of CBAM goods, and critical would be the majority of spend in CBAM categories. And then perhaps look at whether there's a verified carbon price paid. And even with some imports from the EU, bear in mind that at this stage, the UK and EU have yet to confirm that they will link their emissions trading systems. And even goods that are imported from the EU may not be of the EU origin, and they may not have been produced in the EU. And they may not have had a verified carbon price paid. So that's the reason why specific carbon price release templates will be published by the UK government and require independent verification. And then we look at critical concerns could be high emissions, low transparency jurisdictions, no emissions data available, unknown production processes, high emission legacy processes, or companies which refuse to validate their data, or maybe they're not able to, or supplier engagement willingness is not present. And if there's no contractual obligations in a sales agreement, perhaps there's just a commercial invoice, but there's no existing contractual obligations beyond a letter of credit, perhaps. So that brings us to UK customs and CBAM. So here I'm going to discuss the tax point and the various customs procedures that can be used to waive or suspend the UK tax point. So for goods in the scope of CBAM, the tax point will occur when the goods enter a customs procedure known as free circulation. And that means entered for home use with duty and VAT paid if relevant for use on the home market. And entry into free circulation will automatically expose an obligation to CBAM. The customs procedures which can be used to suspend CBAM include inward processing, temporary admission in certain circumstances, not all, and customs warehousing or use of a free port. So inward processing is generally used for businesses processing intermediates. So to use my example of the creation of steel fabrication for a data center, which I used earlier, so imagine the UK, perhaps a company in Germany, is exporting steel pipes, flanges to be created into a steel frame, and perhaps a large steel structure in the UK using a UK factory. The application of the inward processing procedure, which does require pre-approval and pre-application to the UK government, would enable the business to suspend tax when importing intermediates and goods for processing, repair or manufacturing. And the tax point will arise once the finished goods are entered into free circulation. It can be waived if the goods are re-exported, and if the final goods which are produced are non-CBAM goods, the CBAM will only be chargeable on the portion of the goods which is used in the production of the product. Where CBAM goods are processed into CBAM goods, the liability would be based on the classification of the final product, not the previous product. Temporary admission. So there is a limited set of about 27 different scenarios where businesses can use temporary admission and benefit from 100% relief of customs duty, CBAM, VAT, any other applicable taxes for up to 24 months. In other circumstances, if your goods don't meet one of those specific criteria, then perhaps only partial or no relief would be available. And in that case, the full set CBAM liability will apply. But if goods are just entering the UK for perhaps to enter in for an exhibition or being used briefly for an installation, it's possible that they might benefit from temporary admission, providing that they enter the temporary admission procedure and then they are re-exported. And then there's also the customs warehousing or a free port customs procedure. And this would enable businesses to suspend a tax point indefinitely whilst the goods are stored under a customs bond or in a free zone. And the tax point will arise when the goods enter free circulation, and it can be waived if the goods are re-exported. And also there's return goods relief. So UK originating goods, which are in the scope of UK CBAM, may claim return goods relief when they are re-imported. And unlike the standard application of return goods relief, the importer does not have to be the same party which originally exported the goods. Where a CBAM good is imported into the UK and return goods relief is available, there will be no CBAM liability. There'll also be no CBAM liability for EU goods exported from Northern Ireland into the EU and re-imported into the UK, providing the goods are re-imported within 3 years of export from Northern Ireland and returned in the same state in which it was exported. And we know that obviously there's a significant construction industry sector in the UK, and between the UK and Ireland there's a significant amount of trade, and so it's important to be aware of this and maintain proper documentation. Where all of the conditions are met, the return in CBAM good will not need to be registered on a CBAM return or factored into the calculation for the 50,000 minimum registration threshold when applying the CBAM liability tests. So this almost brings me to the end of the presentation. I think we now just need to take a look at the UK CBAM reporting periods to create a time frame. So the CBAM will apply from the 1st of January 2027. And if the total value of your imports in a 12-month rolling period is 50,000 or above, you must register for CBAM with HMRC. And the first year of 2027 will run from the 1st of January to the 31st of December, and that would be the first accounting period. And during this time, the the person must register by the 31st of December, and they must register, submit, and make payment for their online CBAM return by the 31st of May 2028. And if they don't, and HMRC believes that your company is exposed to CBAM, HMRC will automatically register your company for CBAM. And bear in mind that if you're importing goods, their commodity codes and your EORI number will expose your company to HMRC's and the National Clearance Hub's verification controls. So then 2028, the first for the period in 2027, that CBAM return is due by the 31st of May, and then 2 months after that, the return and payment deadline will be the 31st of July 2028, and then there will be the 29th of September 2028, and then from then a quarterly reporting period will be implemented. And so the payment for the previous quarter will be due 2 months after the end of the period. So from 2029, it's anticipated that the indirect emissions may also be included within the scope of UK CBAM. At the moment, the UK CBAM just relates to direct emissions. And this is also related to allowances provided to the electricity sector. So let's just finally take a look at UK CBAM reporting obligations, and interested parties for this might be the procurement, contract leads, finance and logistics sectors. So the CBAM return filing should be completed and submitted to HMRC by the end of each accounting period by the liable person or tax agent. Each consignment of the same CBAM good must be reported separately. Different CBAM goods within the same shipment must be reported separately. And report goods using the relevant 8-digit commodity code in force at the tax point. And also report the carbon price incurred, if any, in GBP. Sorry, excuse me. So I've almost finished the presentation now. I'll just perhaps provide a brief overview of free allocations. So the UK government is committed to implementing free allocation to industries covered by UK CBAM by 2027. This is to ensure that importers of goods covered by the scope of CBAM face indirect tax in alignment with the taxation chargeable to UK producers. And this legislation aligns with the World Trade Organization's National Treatment Principle, which is GATT Article 3, designed to ensure fair competition so that the UK domestic market products will not be treated any differently or to imported products and vice versa. The UK CBAM raises the carbon costs on imported goods, whereas the free allocation lowers effective carbon prices for UK producers. And the effective carbon price is reduced by free allocation. The UK government intends to implement phased free allocation to the UK CBAM sector for 9 years from 2027. And this actually will be until 2025 is the latest guidance. And the UK CBAM rate will account for the explicit carbon price paid and then adjust for any policy to reduce the explicit price. This includes adjustment for both free allocation on direct emissions and carbon price support for indirect emissions from 2029. And two elements impact the CBAM rate. This is the proportion of sectoral direct emissions and the reduction factor, as we discussed earlier. And this brings me to the end of the presentation. So put together a final page discussing CBAM reporting, and if anyone would like the presentation afterwards, I suggest that they contact the team at IACBAM. And thank you so much for the presentation today. I'll give it back to JJ.
Thank you very much, Holly. I have a few remarks. There are a few questions from the audience as well. I think what is very interesting to show or to maybe highlight for the audience, just to see how incredibly, I would say, dynamic our field is, or in particular the CBAM field, because I know you do a lot of other things besides just CBAM. Because just this minute, like right before this meeting started, we actually saw the secondary legislation about CBAM has just been published by the UK government for technical consultation. So this happened like just like we obviously haven't had a chance to go through it yet. So perhaps before you know it, we will be back again for another update to the audience. What pleased me very much to hear in your presentation, I think that is something that is very commonly misunderstood or goes wrong a lot in companies, at least dealing with the EU CBAM, is that you mentioned, link your product information early on in the process to CN codes. I think it seems like a very, very like, like off the cuff remark, right? It's like, just make sure that you know which products have which CN code. But I think if you want to be able to do cost like associations with products eventually, which you need to do if you want to, what products actually will start to cost once CBAM goes into effect, I think it's really important to be able to like link back CN codes to products, because sometimes certain CN codes can cover like hundreds of different products, especially in the fastener sector. So I think that's quite a good remark, and I think it goes wrong a lot because sometimes customers just have no idea that product falls under that category. So I think that is really interesting to see that. And then I had one question that was actually my own question, which was about the authorization process. So you mentioned that the UK government or the HMRC may enroll companies proactively in let's say the equivalent of the authorized declarant status, where if they are expected to exceed the threshold. I was just wondering if the process, or if anything about this process happens to be known already, because to become an authorized declarant in Europe, there's quite a lot of documents that need to be provided. And I was just wondering if you happen to know anything about the requirements needed, or if it's literally just an arbitrary flag that has to be set somewhere in a system. Okay, you're now subject to CBAM.
So I would suggest that it's interesting that you highlighted that, because there's some fundamental difference between the CBAM in the EU and the reporting obligations and the UK reporting obligations. So whereas the EU requires the purchase of the certificates, which I know also was published very recently, just a few days ago, and the price of the certificates was published. The UK treats CBAM more like a VAT, and so it's a self-declared tax that's self-reported on a return. So for all imports into the UK as an island require a customs declaration now. And so other than goods are being imported from Northern Ireland. So because of that, the HMRC has 100% ability to capture both the net rate recorded on the customs declaration and the commodity code and the EORI, which is the economic operator registration identification number. And in the CBAM policy consultation published on the 10th of February 2026, they said companies which didn't enroll, they would automatically enroll them for CBAM, and they would also apply penalties as well for non-compliance. And so we would suggest that they probably have the HMRC will have all of the necessary data from the customs declaration. You notice that they're very strict in terms of enforcing the VAT compliance, and we would anticipate the same with CBAM.
So what you're really saying is that it's just going to flow into existing, let's say, tax compliance frameworks or mechanisms already in place, essentially.
I think that a new set of compliance, I think there is actually some draft, it's covered within the draft legislation. I can't quite remember the exact legislation, but it is published already, and that will probably be extended. But there will be fines and penalties, and also automatic enrollment. All
right. Perhaps there are a few questions, and I think it could be interesting if we could go through some of them. The first question was if you know the year in which the UK CBAM free allocation would reach 0%. If that will be, sorry, I didn't hear that.
So that's published to be 2025, and the relevant document
35, I suspect.
2035, yeah. So a year after the EU, and that is published in a document called the UK ETR Emissions Trading System. I might have it up on my computer actually. But the only, so that's currently the let me just bring up the name of the document in case anybody would like to actually research this for themselves. It's a UK ETS 11 FAR determine the allocation and installation level document, which was published quite recently. It's a 2026 document. So that states that it will be 2025. However, if the UK and EU do execute dynamic alignment, perhaps the UK might consider to bring that forward a year to meet the UK's 2034 statement.
Makes sense. Okay, and then there is a question about the default values that you mentioned. The question is if there will be a default emissions value for each product or just a singular value for an entire sector.
That's a good question. I believe that the UK government have published that initially it will be per sector, although we would expect it to be more granular. Let me perhaps look into that and get back to you.
Yeah, I did hear in the past week that there is a discussion going on behind closed doors in the European Parliament at the moment, or with the European Commission, about having also a singular value for EU CBAM. But this is a rumor, so I don't want to necessarily. So it would, to an extent, make sense. Like if we hear that in the, or we see that in the UK,
yeah,
we hear that there are discussions going on about that in the EU. You know, also from an alignment point of view, I do understand that. Although, of course, it makes things quite complex. But we will not see them per country like we are seeing currently for the EU, right?
That's one thing that there's a critical difference with the EU and UK is that the UK isn't publishing country-specific default values, whereas the EU is. I would expect that that's perhaps because the UK is a much smaller country than the EU, so there's probably significantly higher volume of CBAM-related goods entering the market.
Yes, and then another question is that if a company imports a CBAM product into the UK and then exports it to Ireland, does this reduce the EU CBAM liability in Ireland or reduce the UK liability?
Good question. I think I asked you this question, or you brought it up in the IACBAM training, and yes, what I recall the answer was no, because that's a question really related to EU CBAM, isn't it?
Yeah, so I think if the EU CBAM would recognize UK CBAM as carbon price paid, then the EU CBAM would essentially allow you to subtract carbon prices paid already. But then again, if the product in the UK falls under UK ETS, but it is meant for export, then probably you can somehow, you know, reduce the, I mean, there's unfortunately that is also a little bit of the theme that I heard throughout your presentation, right? There are a few unknowns.
There are a few unknowns. So I frame this in the context of what we know about UK CBAM at the moment, and imagine that it was a. So could you just say, was it a non-EU good imported into? Could you say the question again, just so?
Yes, absolutely. So it doesn't actually specify that, but it says if a company imports a CBAM product into the UK, so I assume it will be a non-EU and non-UK good, let's say Chinese or Indian material or something like this, into the UK and then exports it to Ireland, if it would reduce the EU CBAM liability in Ireland, or if the UK liability would be reduced because you are essentially exporting it. You pay CBAM and then you export it out of the UK.
So you probably have to speak to a real expert in EU CBAM to address this question. But if it was a UK related question and it related to EU CBAM being paid and then it was imported into the UK, it wouldn't apply because the UK government requires a carbon price relief template to be completed by the producer or the manufacturer of an installation, and that is to be completed by the producer or the installation and independently verified. And that is for a producer or an installation. It's not for a carbon price paid. It's not for another country's CBAM rate. It's just for the country of manufacture and related to the actual manufacturing process of the goods. At this stage, you'd have to speak to probably. I'm more familiar with UK legislation addressing this than EU, to be honest.
That's perfectly fine. My initial instinct is if we're talking about EU CBAM in this case, because that's the final destination for the goods, I would argue that probably you would be able to subtract carbon prices paid in the UK as long as you can verify that and the EU recognizes that, both of which are still, a little bit conditional. But let's say that is happening. I guess you can reduce the EU CBAM obligation that would incur in Ireland. But then, yeah, there's a whole bunch of strange things happening with UK and Ireland in particular. Like they don't necessarily follow the Windsor framework at all. The goods flowing between UK and Ireland. So this is a very tricky conversation, and there's a lot of buts and ifs because like I said, normally you talk about goods at risk, and goods at risk don't apply with CBAM. It seems to be a voluntary declaration in most cases.
Absolutely. And I think it's a really important question because particularly if we consider the importance of the construction sectors in the UK and Ireland and different building and installation works that are brought up, it's a really important question to consider at this stage.
And then there's also a question about how the CBAM price is to be calculated. If you happen to know if that would be a weighted quarterly average of the UKA auction price, or if you don't know that, then I also respect that because I am also not familiar with the inner workings of how the price would be set. But that is a question.
That's a good question. I can't say 100%. I know it will be based on a quarterly basis on the average of the UK ETS price. So that sounds about right, but I would have to double check that. But it will be established on a quarterly basis.
All right, and I think we have one last question here. So our EU entity imports steel CBAM goods from China and releases them into free circulation, paying EU CBAM. The same unaltered goods are then exported to the UK and subject to UK CBAM. Can EU CBAM be offset against UK CBAM, or is there another way to avoid double taxation besides a bonded warehouse?
That's a really good question. It's come up. It's been one of my clients who has approached me with this exact question as well. At the moment, the UK government, like I've just said, the carbon price relief mechanism is directly related. It's going to be published as a template to be completed by the producers or installers that manufactured the goods, rather than recognising it. And that's the only way to currently, from what's published, to claim a carbon price relief. So at the moment, I would anticipate double taxation. However, the legislation, this is a really important question for businesses to approach the UK government with at this stage. The consultation closed on the 24th of March, but I would suggest that it's important to approach the UK government if this is going to affect your business, and to say that this is how this will affect my business. Please, can you ensure that there's policy which addresses this? Because there's obviously ongoing talks between the EU and the UK at the moment, and it does seem that that would be particularly unfair and challenging to the businesses to be double taxed, and that would also limit the UK economy so accordingly. So do approach the UK government about it.
Thank you very much. Okay, I think we're through with the questions. Thank you all very much for attending today's webinar. Holly, thank you very much for the presentation. It was very insightful. If there are any questions related to today's session, you can, of course, reach out to the IACBAM, and we will be happy to either forward you the presentation that Holly gave today. We will also publish the recording online, probably in a couple days' time, so you will be able to rewatch it. And of course, if there are any questions that you would like to ask Holly directly, please feel free to reach out to her. Her name is quite easy to remember, unlike my own. So feel free to just, I guess, hit her up on LinkedIn or perhaps drop her an email, and I'm sure she will be able to assist you further. Thank you very much for now. I wish you all a wonderful remainder of the day, and hope to see you in the next IACBAM webinar.
Thanks a lot. Bye.
Take care. Bye-bye.